So it is that time of year again where we go through the 2026 market predictions, and I've got everyone asking me at the moment saying, Sam, what's going to happen to houses next year? Sam, what's going to happen to interest rates next year? Where's the base rate going to be? What's the best product to do? What do you think, Sam? And I just sit here and say, well, I'm going to give you my predictions at the end of this video. So what I'm going to do is work through what we can find online, what the big wigs are saying out of London, and hopefully that can give us some inkling as to what we think will happen in 2026. Hi, I'm Sam Fox, a mortgage expert here in the UK, and on this channel, I literally go through everything from savings accounts to banks, building societies, interest rates, products, you name it. If you've been here before, you know exactly what I'm talking about. Now, before I get into this video and tell you my market predictions for 2026, do me a favor, like and subscribe and help us grow this channel. Right, that's me for now. Let's get into the video. Okay, so here is an overriding consensus of what might happen going into the new year. So house prices are projected to grow modestly in 2026 rather than seeing huge steep rises. Over a 5-year outlook, the UK house prices are expected to increase by 20 to 25% overall. Some areas in the north of England, Scotland and Wales may outperform the south and London due to affordability and supply pressures, although it probably comes at no great surprise. So the number of houses expected to sell will gradually increase from the current levels at the moment. Now, when we're talking about this, there are some things that might be coming later this year in a housing reform that might boost sales. I think the statistic that 500,000 transactions a year just fall by the wayside. So hopefully that's going to be improved. I think there's going to be some improvements to affordability as mortgage rates continue to ease and incomes rise under some, sort of modest growth. But I do think lenders are going to come to the prop market with better products, better affordability to help people get on the property ladder. So let's take a look at the mortgage market and interest rates overall. Now, rates are expected to fall gradually. Not too dramatically though. Now, I'm not talking the rates that we've seen previously where the Bank of England base rate was 0.1%, but interest rates should be starting more with a 3 than more than a 4. And if you can, wrap your arms around them and make sure you secure a fixed rate. The rates might go high, they might go a little bit lower, but make sure that we understand the affordability. 3% of interest rate isn't too bad. If you look at history, it used to be 12, 13%. So if you're getting a rate at 3%, yes, I know mortgage loans might be higher and we're borrowing more at the moment, but those rates are pretty sound. Now, despite the Bank of England having massive plays on this, when they hold rates and when they drop rates a little bit, lenders are already pricing for them. So when it comes to the news and it's like, oh, the Bank of England have held the base rate or the Bank of England have dropped it by 0.25, well, news to everyone, there are rates at the moment lower than what the Bank of England base rate are. So lenders are pricing for this sort of thing. So don't get into this big war with the news and inhaling all the content they put out there, because lenders are setting their interest rates where borrowers can get better interest rates than what the Bank of England set. It's just a gauge. Obviously, if the rates reduce, then lenders might reduce theirs even further. So just to have a little look at the trade-off between the two. So what to watch for in 2026? Well, buyers shouldn't be expecting huge bargains in 2026 because looking at supply and demand, we're not building houses quick enough, there's too many people trying to buy them, it's going to be pushing the prices up. Now, sellers do need to be realistic as well. So moderate growth means longer marketing times or potential price adjustments. Houses can potentially sit on the portals for longer, it's harder to find a buyer, the home buying process might be a little bit longer as well. And first-time buyers and investors should look at the regional markets for higher growth and underperforming areas. Now, changes in regulations such as lending criteria or deposit requirements could influence demand and prices. We've already seen good movements on this in 2025 with lenders looking at 100% LTV. There's a $5,000 deposit mortgage, there's a $3,000 deposit mortgage. There's all these types of schemes that can try and help stimulate the housing market to get those first-time buyers who are in rented onto the property ladder. But because there's more people having access to mortgage lending and less properties, it then does push the price up as well. So finding the bargain might be a bit more difficult. So overall, in my opinion, I think there's only going to be a 3 to 5% growth in the housing market based on what we've been reading so far, based on all the publications of what's going to come out from London and around the rest of the country. Now, I think there's going to be more products coming to the market by the big 5 lenders. So looking at your Lloyds Banking Group, for example, they're going to be the ones that are going to lead the way, I think, into 100% mortgage lending. They're going to improve technology for faster underwriting and make mortgages more accessible to first-time buyers. But I think the biggest issue we're going to face in 2026 is the supply and demand. Houses aren't being built quick enough, and those who don't want to buy a new build and want to buy something that's a little more structurally sound, that has got brick walls internal rather than just external, are going to find it tougher because more people want them type of houses. Not everybody wants a new build. People want something with a bit more character. And I think those who are trying to buy for an investment purposes, maybe trying to find the below market value or buy the properties to refurbish, are going to find it even more difficult, because I don't know about you, but last year it seemed like every man and his dog was trying to buy the perfect property to do up, to refinance and rent it out again. So I think those are the key areas. I also think men taking TRT is going to be on the rise. Everyone's going to be jacked up and everyone's going to sit there with massive shoulders and think, I wonder what's happened here then. Maybe that's not a mortgage market prediction. Maybe that's just my understanding of the fitness industry. Anyway, back into mortgages. I think 3 to 5% growth rate. I think first-time buyers are going to struggle to find something that isn't a new build, and I think investors are also going to struggle as well. But let's stay positive. It's going to be a great year, more lenders, more affordability, and more choice when it comes to finding the right product. And there you have it. We made it to the end of this video and almost to the end of 2025. I just want to say a massive thank you to everyone who's watched our channel, liked, subscribed, commented, and engaged. It means the absolute world to us, which is also Emma and Chris, who are sat behind the screen right now. But thank you, thank you, thank you. If you haven't already, like and subscribe. We've got loads of content planned for next year. We hope to see you there.